think, of course, election outcome was one part of it. It always comes in every 5 years. But we need to also look at from economic activities continuity point of view. There's new government formations with the coalition after two terms of 5+5. So this will only further boost the economy in the sense that the focus on building the economy next level by way of focusing on investment-led growth, consumption-led growth. At the same time, make each state prosper on its own by way of making the GST to one of the driver of the India's most successful tax efficiency system that they built. On a holistic basis, if you look at the new government ministry formation that has been maintained would not only give the continuity factor a strong weightages, it will also make it more robust from the point of view of driving the economic growth to the next levels. The political will continue to remain very high to take the Indian economy next level. Indian market will continue to remain robust, optimistic from a growth perspective and growth expectation perspective. Therefore, largely we have to look at the next 10 years of India period when you compare with the global markets. Of course, we still have I think 3-4 weeks to go. Definitely this year the budget, there's high probability the fiscal consolidations will be maintained. There's high probability some steps will be taken to boost the consumption of the country by way of marginal reduction in the tax rates or making it no tax up to a certain extent in terms of limits, given the fact that more and more people are getting into the working age group and they have the requirement both for spending as well as for buying a house. We'll also see some importance being given for the real estate sectors, wherein we can probably see the limit of 2 lakh rupees getting increased to a higher amount, so that more and more people can own a house in the country, which I think could be one of the focus. But in addition to that, I think budget will largely keep the capital allocations by way of government spending, which is again has been the driver of the economic growth, whether it is in railways, roads, port, or any other infrastructure which has been the government focus, including airports. And those investments will continue to see higher capital allocation coming from the government. So it's a good news for the inclusion of Indian sovereign bonds as part of the global bond index. I think as it is known, as most of you would be aware, India has been pitching for inclusion in the bond index for very long, and finally the bond it got included in the bond index without any conditions being enforced, forced on government of India. That's one good news. And second is the total amount that likely to come through this bond index inclusion to India is roughly about $25 billion. I think first tranche would probably starts coming from the month of June, and then the each tranche will be coming in. So most of the pension funds who have been large investors in bond market globally, their allocations would come into India. Therefore, you can do two good things. One, forex flows will increase, forex reserves will increase, and bond yields will remain stable or maybe on the low. Therefore, they will also have a cascading impact on the interest rates in India, especially for government borrowing, which will also keep the borrowing relatively cheaper. There has been some expectations after having seen continuous hike in interest rates the last few years, both by global economies as well as in the economy. There are expectations interest rates will be brought down, but as RBI keeps reiterating that, while of course growth momentum is good, I think inflation is something can be on the edge, and it can even move up a little bit if there is a shortage of food in the country this year, or food prices go up, or the oil prices moves up. These are some of the uncertainties for which we don't have an answer. Therefore, interest rate cut, in my own belief, will not come in a hurry. as high interest rate today is not affecting the borrowers in any manner, or even not affecting the investing companies into various projects by increasing their cost of capital, also not happening. I think the first move for rate cut would come from US, which already of course started coming from other countries like Canada and few others, and we'll probably see the first rate cut coming from US. India may not follow immediately the rate cut. The first one, as the time progresses, say end of the year or the beginning of next calendar year, I think India probably will start cutting the rates in a gradual manner. But at this point of time, the higher for longer, I think was generally the term was used maybe about 2 years back. Maybe the higher for longer probably would be now brought down to about say 9 months to 1 year. Of course, gold is something, gold and silver. In general, people tend to own by themselves in the form of physical. Fortunately, over a period of time, the same gold and silver can be bought as we buy an equity asset class and hold in the form of security. That one change has happened. I'm sure every investor would have known about silver ETF or gold ETF. In fact, the last few years, Multi Asset Allocation Funds also gave a birth. I think they are Multi Asset Allocation Fund which invest in equity, which invest in fixed income, which invest in silver ETF, which invest in gold ETF, which also invest in REIT and InvIT. Such asset classes have come. Multi Asset Allocation Fund generally is the scheme through which investors can participate into all the 4 asset classes in one fund. At the same time, investors can also own gold and silver by way of investing in the ETF, which is a much easy way of buying and selling. At the same time, hold it in the form of securities in a demat account, and not necessarily have to hold it in your home and run the risk of physically possessing these assets in your cupboard. And instead of that, owning the same assets, getting the same benefit in the form of investing in ETF, that's something even investors can choose, in addition to Multi Asset Allocation Fund, which invests across 4 or 5 asset classes such as equity, debt, gold, silver, REIT and InvIT. So I think from a money manager's point of view, most of the money managers manage the money actively, whether it is in equity or in fixed income. At the same time, index funds, which is nothing but replicating the index, also have been one of the choice for the investors. The same way, Quant fund, which is of course ABSLAMC mutual fund, we launched. It just closed for subscription about a few days back. We will know the final number in the next few days. But the Quant mutual fund is nothing but making the machine to work on your behalf on the basis of the predetermined formula that is fed into the machine, which is a computer generated shortlisting of investment universe, which is again derived from either from the market. In our case, it derived from the ownership of mutual funds across all mutual funds, and it's about top 75 companies. From that, we identify the investable universe, given the fact these companies are well researched and well performing, and within that we construct the portfolio using the model which is generated on the basis of the prefixed condition that we are given for selection of stocks which will have ownership in the portfolio. And this model is another way to manage your portfolio. It is actually active, but active, the formulas have been fed to the system, therefore a direction system helps you in identifying the final winners. And given the fact that it will have every 3 months rebalancing the portfolios, in contrary to the general active funds where you sit, buy the stocks and sit tight for long, and these funds will also spot the trend and basis which will try to trade in the market, therefore it can generate higher alpha for the investors. That's the whole motto of Quant fund that we launched, and this can again be part of the asset allocations for any investors, as invest in equity, as invest in index funds, as invest in fixed income. And Quant fund also become one of the fund, can be part of the overall asset allocation that any investors considers.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।